Hello, everybody, and welcome to the Plus Three Futures in Commodities show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. We are recording on Friday, March 28th, about an hour before the close. How you doing, Barry?
Doing great, doing great.
That's good. On today's show, we're going to be focusing on the huge date we have next week, Barry. You know, the date that everybody in the markets are concerned about.
Yeah, April Fools, right?
April Fools and the day after that, which is Tariff Day, or what did he
Right,
call it?
right.
Not Judgment Day. What did Trump call it? I
Freedom
can't
Day,
remember.
something
No,
like that.
something like that.
Yeah, yeah.
Justice Day or something,
hmm
whatever. So that's the thing that the latest shiny object that everybody's focused on. Before that, it was the Fed. Before that, it was CPI, then PCE, unemployment, you name it. Every week
Yeah.
they tell you there's something to focus on. What we
Yep,
try
yep.
and do on this show, as you guys know, all the people that have been watching for years, we try to focus on the levels and the technicals and the cycles. How did we get here? Where are we in the move? So that we can assess the odds irregardless of the news that's coming or the news that happened. We're looking at what does the chart favor and what do the cycles favor in terms of possible outcomes. And there's no better chart to start with than the S&P because, and as Barry has it up there, as you know, near the top, we kept saying you guys got to be careful. You got to be careful. There's the cycles hitting, major cycles
hmm
hitting. We're not making progress. We're going sideways. This could be
hmm
a big distribution pattern. While
hmm
everybody, almost everybody in FinTwit was saying we're going to 7,000 S&P or 6,800 or the melt up is coming.
hmm
So the main thing we've been talking about, it's a topic that we keep hitting at the end is don't focus on the news, focus on the pattern. Don't focus on the news, focus on the cycles, because this will give you a sort of ammunition against and armor against that human tendency to want to kind of follow the crowd and have something be explained to you beforehand. So I don't know
hmm
why I went into this rant, but I think I felt it was important because it really is critical, especially with the cross currents that we're going to be seeing, over the next 12 to 18 months. So, without any further delay,
hmm
Barry, let's jump in on the S&P because there's a beautiful chart with a beautiful hit at the top and then
hmm
caught the perfect high on the rebound.
hmm Well, I think it's important to talk about how we got here because that's part of the story. And without the backstory and the analysis that went prior to this, I think, then it makes more sense to keep that thread going. So I think, yeah, it was good to talk about all that because, talking about that unfolds into the future and what we're talking about now will, go on in the coming weeks. So last week for the last couple of weeks, ever since the low came in, we've been talking about watching, first we talked about unfinished business, thinking, we should go a little lower, at least to get to the 90 and possibly lower, but at least to get to 90 because we didn't have really a proper finish. And we left it off with that. And the second part of that was to look for a great place for the counter trend to stall out. And well, last week we talked about this 56.73. If we hold it, get above that, then this zone up here is going to be the next level of resistance. And this is the cash chart, the calendar daily chart. So sure enough, this week we ran up there and 57.50 between 57.50 and the 50% of the square, which just happens to be around 57.82. We stalled out for a couple of days and well, basically rolled over. And so that sort of fits in everything we talked about. We wanted to see a run up, we wanted to see a stall at a key level, and then we were gonna, well, trade the short side, which is what's happening. Now, I suppose the next step is to move that entire story over to next week. So,
Right, right. What's
so
most likely?
yeah, and funny thing is we're right at 55.82 as we're speaking about it. I mean, look at this, 55.82 right there.
Yeah,
And that's
that's
a level.
support.
hmm And I mean, of course, price could be anywhere, right? Isn't that funny? Every time we talk about a level, it's just there. So, so we're looking at 55.82. Obviously, if we're going to hold it, we better hold it here, because if we take out today's low come Sunday night, Monday, then I think we can probably expect new lows.
Hmm.
It just seems like the proper correct thing. Now we could set up for ABCD up, like you were saying earlier, Ben.
Yeah,
Give us a nice, maybe a 7.86% retracement,
right.
and then ABCD up. Yeah, that wouldn't be out of the question. Anyway, in the meantime, just remember 55.82. Above that, we might be getting that ABCD. Below that, we might still get it, but boy, we think it's gonna be slippery down here. And with that unfinished business, I feel like we could definitely go down and tap the 90 level. It happens to be 54.17 in that area.
Hmm.
Um, and I also have this 53.15 mark for some reason. I can't remember exactly why, but I'd pay attention to both. So the 90 is 54.17. Let's just leave it at that.
And Barry, there's also, if we do take out those lows too and take out the 90, then it could get really ugly. Like, I mean, this could, because if you just count the one down, two up, it could be the fast move lower.
Oh, absolutely. Yeah. I mean, that's the thing. I mean, and that's the one, three is going to end up down here around 47.50. So,
Yeah, that's right.
well, look, these are all possibilities. We'll see. We'll see how it all works out. Like I said, if we get the ABCD up, and then we might have another shot to do this. The other thing I'm seeing is we're coming into a 45-day run, which ends up right around April 5th, which
Hmm.
is, a couple of days after
The
the big
latest doomsday.
yeah, the latest, exactly. So that's something to watch, because if we can get down there right around the 90, 45 by 90, I mean, that would square that out. I would call that a great place to, have some kind of a counter trend. And
Sure.
this would have some kind of a feeling of closure, for this leg.
Right. Right.
So anyway, those are the things to watch. So 47.15, if we get down there by the fifth, hey, we could be squaring out. Anything else you want to add? That's all I can think of for the
No,
cash
that's
chart,
good.
and the basic pattern is that. And now let's take a quick look at the futures chart. This is a continuation chart. And here, again, we stalled out right about the 50% level, and well, and rolled over. It's continuation, so this might not be exact. And we rolled over, and that's that. If you look at the front month, it's pretty much the same story. If I move it, and I left it on the high, but if you bring it up to here, we almost went to that 50%, which is this 45 degree
Hmm.
square. That would have been
Hmm.
right around 58.69. Didn't quite get there. And we also talked about this zone holding on the way up. Like, if we can get above it, come back like the low we had Thursday, if that held and we took out Thursday's high, well, then we have that potential for another um, retest of this upper resistance level. But we didn't. Instead, what happened was we took out Thursday's low, and that was it. And all she wrote, and the whole thing just sort of dropped. And it really looks like we're heading towards the 90. But
It also just
mhm,
shows how the changing character is different. Like every time we got a sell off before this big sell off we got in February and March,
mhm.
we would come back and it would hold those levels on pullbacks, right? It would give
Right,
us the higher low,
exactly.
hold it, and
hmm
then take off
hmm
and make a higher high. And now we just the whole thing was struggling and it was just
Well, now we're
acting
holding
different.
the resistance level. So, we
Yeah.
we basically flipped the whole thing,
Yeah, but I mean,
instead
and
of
also
holding.
look at the structure on the rally, how sloppy it was.
hmm
It was just struggling to go up.
hmm
And it's
Yeah,
just
yeah,
just noticing it's a change of character. That's all.
completely. And your Rebel Yell cycle hit. What was that? Exactly, pretty much on the high, right?
It was on the high on the
On the high.
26th. Yeah.
So I don't see how this is going to end today if the
Right.
Rebel if the cycle hit on on the high. It seems like we have a little bit more to go.
Yeah. Yeah. It
Just how
seems
kind of
that
how the
way.
rebel yell works, right?
Yep.
And well, this is the continuation chart of the E-mini. Again, we tried to hold about this 57.50, couldn't do it. Like Thursday's low was the key. We took that out, and that lit out the entire thing.
Hmm.
And so we'll see how that works. You guys have the numbers. Dow again, the 216 degrees up we talked about. If we can hold above that, that would give us some kind of a I don't know, glimmer of hope towards testing the 43,723 level. But not quite. We took out the 216-degree level, which happens to be 42,548. And well, if it was holding below that, like last Thursday, or Thursday before last, if we held that and we reversed, like this looked pretty good. I mean, that was really kind of a trap, right?
Hmm.
It was a reversal, pretty much of a key level, gap open, ran up a couple of days. I think this whole setup was already in the making when
Hmm.
this happened, right? Then we had the outside reversal right at the high, and then couple. So one of the things that we have structural support, and we're a quarter of the square at 41,348. So I would watch that area to see if we get any traction, get any support there. If we don't, like I said, we're probably going to go a lot lower. The Dow, what would match up to Dow would be around 40,238. Would be well, that would give us new lows. We'll take out the old rundown and set us up for a whole nother pattern. So either way, they're all kind of pointing down for now. But you guys saw the April 5th, we're coming up on a 45-day run, and that's important. So we got to,
Hmm.
we have to be on our toes to without knowing that timing, it becomes a little bit more difficult. But knowing that, I think it's a little bit easier. Here we're going to look at the cash weekly chart. We've looked at this chart before, and well, here's that big ABCD that sort of terminated there. Then, we're waiting to see how price will resolve at the 240-degree level. Obviously, it didn't, stay up there, reversed, came down. So 55.58 is really the level we're watching on basis the weekly. We could, like the first move down, we went a little bit lower than that. That's fine. Popped up. This is a big outside week compared to last week. So basis the weekly, we want to watch this 55.58 to see, maybe not exactly next week, how we do it here. If we get below and start putting in a little bit of time here, next level
Trouble.
down is, yeah, we got,
Hmm.
it's 50,081. It's the next level down, 50,000, let's say 70, 76, 50, 76. Let me type it in. I know you guys are writing these down. So,
The other thing great about this chart, Barry, is it captures sort of the whole thing that happened since COVID, right? Because you got the ABCD at that
mm-hmm,
COVID low.
yeah, yeah,
And what the chart is saying, and again, this is a weekly, this isn't a 5 minute chart. It's saying
mm-hmm,
that ended and
yeah,
something else started.
mm-hmm.
What that is, we don't know, but we do know that is over.
Right. Well, we know it's not going higher.
Right, right,
So,
right.
not
That's
just
right.
yet.
Right.
It's just a matter of, I think one of the things about what we don't know is we're looking to see how it's going to unfold, right? I mean, that's always
Correct.
the thing.
Yep.
We're going to be down in 30 days, we can down in 45, 90, what's it going to be? And I mean, we'll do that week by week, but it's, on a weekly, we have to kind of keep an eye on the overall template. So
Hmm.
we have 55, 58 to watch. Give it, if we slip that somehow, then this 50, 76 comes into play, 180 degrees up from the COVID lows. Who's to say,
Yep.
right?
It's
And
important.
then, yeah, and if you really want a good correction and real value, here's 41,000, 4,100,
4,100. That's right.
right? About 50%.
That
So,
would be a 50% correction.
I mean, I can't even imagine how that's going to work out. But before that, what I have, I just noticed I have this channel. Remember this geometric line I
Yep.
had drawn
Yep.
up here? And
Yep.
you can see the week before I mean, the high came the closest to the line. after
Hmm.
we did it in December, right? When the high came in, drop
Hmm.
came back like the kiss from below. Now, the matching channel for that, if you put it at the low of the 22, this is that line. Can you see that clear
Yeah,
enough?
yeah, I can see
Yeah.
it. Yep.
So if you take it, I don't know, if you put it on June, the price comes out to about 45.86, which is pretty much where that 50% line is.
Yeah.
That's if it's June, but that's how much room we have to run on this, just the up channel, And it's a funny thing is, you guys, I didn't draw this line once the price got there. This line was here when price was even struggling early part of 24.
That's true.
So yeah, it was kind of a target, right? It drew it up in there. So there's a good chance that it could work out. So that's why I just like to leave these things on there just so easier to track. All
It's a
right.
nice one.
Yeah, it's a good one. It's good to look at it every once in a while just so we have our, you know, get everything straight. Let's take a look at our 30-minute chart.
This has been
Is it?
really good, this one too. Is this the front?
Yeah,
This is the front month one,
it's
right?
the front month futures chart. It's been a great week for this. So last week, God, was it last week? Yeah, we talked about this 58.30, 58.19, this area being resistance. And as you can see, we just couldn't get above it. We tap a few times. And, once we lost this 58.19, you can draw a trend line here, straight down to 57.39. And which was, pretty much kind of where we were bouncing off of earlier, other than these spikes. And then we just kind of struggled above it, but really couldn't make any gains. Tried to get up close to 57.85, which was a resistance. Couldn't quite do it. And you can start to see how we were starting to make lower highs. And after the second lower high, we made a lower low rally, and this is where all the business got taken care of. And this morning it was great because we broke it, came back, tapped 57.39 right there before having this grand drop, right?
Hmm.
Um, so I thought 56.94, yeah, decent support, 50% of the square. Forget that, went right down to the 56.38 level, right? 38.48, right in this zone. And now, if you look, we even slipped through that. Now we're below 56.38. And you can see it's just right below it, right? Just hanging under it, can't really get above it. So this is probably not the most bullish place to close. So now what's going to happen next week? We'll have to see how we handle this 56.38. I think the key here is see if we can get above it or not. I know we talked about Friday low being taken out. That's one part of the story. The other thing is to see can we get above 56.38, or are we going to try to run up and stall, kind of like how we did here,
Yep.
or here, or here. So this is going to be a key area. And if we slip that, well, we talked about new lows coming in, so that would mean the March 13th lows would have to get taken out. So there's some support here, 55.48. And if they slip, then we really go down to 5,500. And we'll have to see from there. You guys have to tune in, check into our X post. And we post stuff every morning right around the open or a little before, at least for myself, a little before, a little after. And Ben, you post all the important stuff you see throughout the day
Sure.
and a lot of the NASDAQ numbers and everything. And if you guys like our work, this is a great time to subscribe and hit the alerts so you guys know when we upload the things because we don't really have exact time. It's usually Saturday. And also if you like the work. And what else can they do? Share with
Comment.
friends. Yeah,
Comment.
comment. Yeah,
Yeah.
comment and share with friends and do all the cool things. Well, that's pretty much what I have for the ES. I think we can. Anything you want to add overall? I know you're going to be looking at
We'll look at
NASDAQ. So yeah,
yeah,
NQs.
NQs and Bitcoin.
So we
I
can
think
see.
no, I think you got great coverage. It's that the evidence continues to unfold that the regime has changed, right? Where we've
Yes.
shifted from bull to bear. You shifted from buy the dips
Hmm.
to sell the rips, and
Hmm.
we've been talking about that, mentally getting used to that and the
After the
evidence.
high came in, we weren't
That's
saying it
right.
before that.
No, no, no.
So,
That's right. After the high came in,
uh-huh.
we were saying you got to shift your mindset now because the odds have tilted and the evidence. continues to support that. When the evidence no longer supports it and shifts the other way, we'll shift the other way.
Hmm. All right, let's move on to bonds. Let's do our regular set. Bonds, we're still kind of on the wire being this 45-degree level, happens to be 16 and a half, 16, 16.
It's a hell of a battle there, isn't it?
It's a big battle. Yeah, yeah, it's a big battle. And we started to go lower, and today, of course, we dipped around a little bit, but what's happened so far in March was we started making lower lows and lower highs.
Hmm.
So you could say we trended lower. And I don't have a whole lot of science saying that we're done, but we'll see
It's
what happens
similar.
here.
It's got a similar look to nat gas that we're going to cover, and I'll show you what I mean on the daily. It's funny. It looks them very similar.
Hmm. So that's the bonds. When it's on the wire like this on a key level, there isn't a whole lot to do on the level. What we can do is watch it and catch the move on the other side, right? That's kind of what we do. Let's take a look at the weekly bonds. So bonds again, we're in a downtrend clearly, and we're holding at the 144-degree square level. It happens to be about 119.11. So far, you could say we're still the lower lows and lower highs are intact. Here's a high, lower high again,
Hmm.
and lower low. So we're kind of between the last swing high and last swing low, and waiting for this to resolve. And we talked a couple of times about the market is consolidating within 14 and 16 and a half or so, being it's a possibility. So let's wait to see. Not much to do there at the moment. Let's move on to crude. So crude quietly moved away from the 50% level where we had support. Support was at 64.75. Started moving higher, which is kind of what happens when the market hits support, and moving to a 73.50. We'll see what happens here. There's some overhead coming up actually right here, 70 and a quarter. All these overhead on the same square. And I feel like it's still consolidating. We didn't quite get down to this area and clear up anything, flush anything out. But I got to tell you, Ben, though, I feel like it's just gonna, do it one of these days when nobody's looking. So keep an eye on that.
Yeah, no, it is kind of
Mhm.
creeping, isn't it?
Yep, yep. All right, let's take a look at the weekly. Pretty much the same story. I mean, we made a higher high and a higher low on the weekly chart, bar wise, and the support is holding. Not much to do here till we, basis the weekly till we get a decent setup. Now on this other circle chart we've been watching, we're back up at we talked about how this triangle is kind of starting to squeeze,
Hmm.
and we're right up against the upper trend line. So some action is definitely coming in the next few months. So it's just building up. I don't see how else it could work out. So let's wait till that happens. Let's move on to gold.
What a week.
What a week, what a week. What a week, what a day.
Hmm.
So a strong market, this is what happens. This is great. It's great to see when it happens, which is, market comes up against resistance and squares out, and it takes so much force to kind of get through that. It has to sort of gap through. That's pretty much sort of the power it needs to do that. And we did it in style. And of course, when the market starts to gap, we could be getting nearing the end of the run. But
Yeah,
but this
it's also a warning sign, right?
it's a warning sign, and we have till about 180 is really the next big spot, which is 32.64. Let's see how we do there. Now on the way, to the downside, 30.82 is support. 30.82 is the 50% square. But obviously, like we say every time, gold can pull back, even down to 30.23 and just be fine. So there's no problem here. Everything looks okay. Especially since we ran through that square, it hardly had any kind of a pullback. Just a couple of days, little tiny little triangle, and just broke out. So it's looking pretty bullish.
It's amazing on this run how many times it's squared out and then just corrected either very
Mm.
shallowly or a short time period and then gone again.
Well, that's a sign of a bull market, eh? That's when you kind of,
Hmm.
stop trying to pick a top and just trade it till, till the
Yeah.
top comes in,
Yep.
because they just keep pushing. And a good sign of that is, watching for, squares to get taken out. If they get taken out in this fashion, then it's very bullish.
Hmm.
As much as, if the market reverses immediately and starts getting weak, then that means the square, price is balancing out on that particular square. All right, 3066 was the big level on the weekly chart. This is coming from the 22 low. I mean, it looks all wide open now. This is looking pretty strong. Even this little ABCD has a higher target, I think. So there's you know, plenty of room to go. Yeah. So even if you did a ABCD coming off of this, going into some kind of a termination, that pretty much ended at the 50%. We blew through that. Well, more power to gold.
Yeah.
And I don't know how much this is in the news, but wow, right? Gold just tearing it up, full blown bull market going on. And what's great is we've been talking about being bullish on gold since God knows when. And even when all the pullbacks were coming in, all the consolidation, we're looking at places to get long and telling everybody how gold's going to go. But we had no idea why, and we still really don't know why. But the market's moving. There you go. And pretty much the same thing that happened with us with silver and copper. So speaking of which, let's take a look at silver. Looked like it was really trying to get above this 270-degree level. So 34.38 is pretty much a 270-degree level. We're well above that today. If we can hold above that level on any kind of a pullback, or if we can consolidate above that, I think silver's pretty much right on the coattails of gold. We're just moving right along. Everything looks fine. But the key level to watch is this 34. Um, let's just say 34 or 34. Easy enough to remember. So yeah, that's the level to watch. If we're above that, I think we're good to go at least to the next half square, which is $37. So there you go, $37 silver. That's what's happening. Let's move on to copper. Copper did something cool. Did you see the weekly chart? It was went up to 216 degrees. We'll look at in a
Yeah.
minute. Pretty
Yep.
good, right? Yeah.
Hmm.
So I had this 533 up. I guess we're looking at it last week, or somehow I got that. And we got pretty close to it. 537 was the high. And reverse again, copper's in really good shape above 495, $5. So not much to add to that other than we've been bullish, and you can see it's working out fairly well. And if this so this is getting close to a 90. We kind of tapped it. I'm wondering if we're going to go up and try to tap it again. But
Yeah.
long as it, huh? Yeah, go ahead.
It looks like it's either that or a false break that we're making, just the way it reacted
I
there.
guess this, yeah, that's
Yeah.
true.
So,
And yeah, for now, let's see if we can hold about $5, 495, 494. If you can hold above that on any kind of a pullback, I mean, really good shape. Even if we get down to the quarter level, 470, it's still in good shape. I mean, we're talking overall, right? In the big picture. On the short term trades, well, we got very close to the target there at 533. We're at 537. Yeah, let's see what the next consolidation looks like. Let's take a look at the copper chart. Here's the weekly. We're up 216 degrees from the 2020 low. That looks like a pretty good completion. I'm not gonna complain about that. This is the false break you're talking about, right? This being a possibility. Well, that being the case, we really got to watch this week's low and see if we take it out next week and reverse. If we don't reverse it, somehow hold that, we might be okay. But if we reverse it, looks like we're going to correct a little bit before moving on.
mhm.
And this 480 level is really good support. So probably going to consolidate here before doing anything else. But yeah, we did hit a target level on a weekly basis. So we'll leave it at that. All right, let's move on to the dollar. Last week we talked about the 60 by 60 that's potentially setting up. That's around 102 and a half in price, and April 7th in time. And that's very close to that April 5th that we had in the other chart. So it's
This
possible that we get down there, get down into the 60 level and we sort of finish that up. Possibility. We're watching it. Market wasn't, the bounce wasn't that great. I mean, couldn't even get above the quarter square, kind of came and rattled around a little bit. So I think we're not finished with the lows. It seems like we could probably press a little lower and see where support is. And just to make it easier, I think today's low, a lot of the markets, today's low is kind of important. So if you watch today's low on the dollar, just remember that's where the 50% level is. So if we take that out, most likely we're probably going to go a little lower. So I think that's what's in order. Let's move on to the weekly. So this is a square of the range chart. We talked about it last week. It just seems like we made a higher high and we have a really good chance to make a higher low. And that would mean we're ready to move higher, but I'm not so sure if we're done with the business here. Not meaning like we have to go lower on the weekly chart, but at least go back and check the levels that we saw on the daily chart. So far on this chart, we're holding pretty well. Looks okay. I don't have any problems with it. And we're well above the 50% level of the square. Looks bullish overall. So maybe after the second, things will straighten up a little bit, my guess. All right, let's move on to the euro. We not more or less, we basically stopped the 109 level we had marked on the chart. Started pulling back. Thursday's low, we reversed today, but we're in that 108 area now, and I have a feeling we're probably going to consolidate here before we finish up. I'm not so sure if we're going to make a new high, potentially a false break, or a lower high up here if we rally, especially if the dollar goes down to correct. But either way, right now, since we have to treat this high as it as a square out, or at least time ran out on that cycle, which 45 days, and we're looking to see if the lower high sets up as a sell and the corresponding move in the dollar. Seems like that's what's in the mix.
looks like it.
Looks like it, right? Yeah.
Mm-hmm.
And on the weekly, pretty much the same case. I mean, we're still in this 108, right in the really right in the middle of it. So not much to do here. If you're going to roll over, great. Let's just wait for it to set up correctly and take that trade. For now, yeah, we'll have to lean on the daily for a lot of this work because it's the square that we had here and everything timed out perfectly. And if we can somehow get on top of this 108 level, I don't know if you guys can see that. So he's 108.071. So just say 108. If we can really settle above that next week, then we can look potentially go up and test that 109 level. And otherwise, we're pretty much going to roll over, it looks like. So that's it for the euro. That's the daily. Weekly we talked about. Let's move on to the Hang Seng. So
Struggling
this
a little bit.
is struggling, and this is one of those markets where it's holding very tight to the square. There's a square 144, and a line of 144, square 72, running at this 23,880 is really the level. And we basically talked about how if we can hold above this 22,709, let's say 22,710, that Hang Seng's in a pretty good position, pretty strong. And if we can get above this level, this 23,880, then obviously it's a lot stronger, and we can run again, maybe go up and check the 50% level above 26,000 level. So we're waiting for this to sort of finish the consolidation process. It looks very tight and proper so far, but we do have time, enough room to get down to the 22,700 level to sort of check back. And but we had a good run. I think it's better to, and we had that three drives that you mentioned last week, I think. So let it finish up the consolidation of the correction, and we can pick it up on the other side.
Sure.
Um, Natural gas. I think you're going to cover natural gas today, or you're going to look at it a little bit, right?
But that today. Yep.
Yep. Okay. So yeah. So let's do that. That's all I have. I pretty much ran through all the charts. Let me put it back to you. We'll look at Bitcoin and NASDAQ and a couple other things, right? Gold
Y-
charts.
Yep. I got
All right.
something on gold to look at.
Wow, look at that. NASDAQ did the same thing right up to the 50% level. Not even couldn't even tap it, but
Yeah, I couldn't even make it.
hmm
The first thing I want to show people when I talking about change of character. So we had this big sell-off right into the low, and then
right.
look at how we went up, right? Compare that
hmm
to the August low. Look at how we came out of the hole here.
hmm
You know, went
Very
up,
clean,
checked
steady.
back, and then boom.
Mhm.
This has all been like choppy, sloppy on the way
Yeah,
up.
bit of a
I
struggle.
mean, it was a struggle. That's exactly right. We
hmm
struggled at the first, the first level, which was the 180 degrees up, which is the 19,925. And last week we said, look, here's the key spots,
hmm
19,925 and 2642.
hmm
We pushed up, couldn't even make it, as you said, and then just sliced right through. So now, next week, obviously the lows here are in play, the 19,100 to 19,200 area. So
hmm
that's in play. If we make a higher low, then we should be able to push up, maybe do that ABCD we were talking about on the ES. Let's see where that takes us. If we do some kind of low in here. Right up to 50% of the square.
Yeah, that would be a nice setup. hmm
Yeah, it would be a really good setup. So the weakness is there. I hope you're noticing the changing character, right? Look how easily we go down and how, you know, with difficulty we move up. So it confirms the things that we've been talking about, and and again, look how easily and quickly we're going down. Again, basically just taking out the last week and a half of price action. So NASDAQ remains bearish. We know the numbers now, 19,925 above, 19,197 below.
hmm
Let's jump over to the weekly. There's your weekly.
Yeah, well,
We we And what it's gonna do is this is gonna be an up bar, but we're gonna be closing near the low of the up bar because this was
yeah.
inside. This was inside, so we have
hmm
an up bar, but we're closing on the lows of the week.
Yeah,
Not
well.
not exactly screamingly bullish.
No, not even a little
No,
bit. Not even
no. So
whimpering.
I mean, it looks like it's heading to that 18,000 area.
hmm
That's what it looks like. Unless we, can next week not take out this week's lows and push higher, it again looks like okay, we'll have had one up bar and then a down bar right away,
hmm
which is a sign of a weak trend.
Right.
Weak trend. Let's check out the monthly. The monthly we talked about. We have after today one more trading day. We're the full bar is under the half square, so that means the path of least resistance is going to be the 18,200 area. And that
Right.
happens to be, if we look at next month,
hmm
essentially right where this trend line is.
hmm
If that gives way and we get stuck under there, then you're talking 15,000.
hmm
That would be a big move to say the least. Anything you want to add on the NQs?
Well, I mean, it looks like it's NQ is also following pretty much the same pattern, right? It ran up
Hmm.
into resistance, which we were looking for, and sort of reversed around the right price. So now it's just a matter of finding the downside targets, and your 18,000 looks pretty good. I mean, going to
Yeah.
scare some people, but hey, you know,
And if we do come down into this area that, there's nice structural support here.
yeah, yeah, yeah,
You have these lows and you had the highs over here.
right.
But I guess the big key is going to be, do we get a higher low or not?
Yeah.
You know, it's not
Hmm.
looking like it. It's not
No,
looking
no,
like it.
it's not looking like it. But I mean, you just be ready for either scenario. So
That's right.
either we if we get it, we trade one way. If we don't get it, well,
I mean, the
there,
the the irony is it's going to be bearish either way. If
yeah,
we do an ABCD up and fail here, it's going to be bearish. If we take out these lows, it's going to be bearish. So we gotta,
yeah.
you just
Well,
gotta
slash
you gotta be prepared.
if we take out that low, it's going to be bearish slash slightly panic, slightly panic.
Yes, that's
You know,
true.
you know,
Bearish slash crashy.
crashy. There you go.
That's I don't know if that's a word, but we just made it up if it's not
Hmm.
because it that's what it's going to start looking like. So
Hmm.
we'll see. We know the levels. Again, we don't have to predict. We just watch price action versus the levels, and then it'll give us,
Well, the beautiful thing on this chart is how Thursday's low is right on the line, and once that got taken out, it was it was short work.
yeah. I mean, it's a big down day, like almost
Hmm.
600 points
Yeah.
in the NQs today. So
Yep.
we'll see.
Yep. Yep.
We'll see. All right, let's jump over to Bitcoin. See how Bitcoin's faring in this risk off. Even though people are calling it a reserve currency, an alternate reserve currency, and a safe haven. Let's see.
Hmm.
Not so much.
But guess what's rallying, right? Alternate reserve currency, and the gold is like new highs.
And that's the real right. That's the real
Hmm.
alternate reserve currency.
Right.
Anyway, we won't get into that
Yeah.
debate.
Yeah.
This was It's interesting because the last week when we were talking, we were saying, look, this 85 280 is the big number, right? And
Right.
early in the week, it looked like, okay, we got stuck under, then we popped up on top, we sat on top of it, we went up, and now today we're slicing right through it.
Mm.
So next week we want to see, can we get a full bar above or below this 85 280? If it's above, that's good. It means we can push up and
Hmm.
attack 91. If it's stuck below, then we're heading to the lows,
Right.
right? In that around 80,000 area. And I do believe we just have, like you said, with the ES, there's unfinished business. I think we got unfinished business down here.
Hmm. That is a
I
good
think
decent level to correct down to.
I mean it's a full square. It's structural support. It could, we could put a little zone.
Hmm.
Let me put that in here. Hold on. We'll put a little zone in here because I do think this is probably a decent target, like right in this area here.
Hmm.
Pull it down a little bit more because I think you got
Yeah. Played down to 67,000.
right. Nothing like precise targets. I wanted to capture that eighth.
No, no, that's good. Yeah. Yeah. Yeah.
I mean, because and look, you can see, why there's the full square
Hmm.
there, and then there's your
Hmm.
structural support here.
Yeah. Perfect.
So this is, I think, a decent target for it. You'll probably scare a lot of people, maybe push it a little further because of that. But if you think along those lines, that's probably a good spot to think for Bitcoin. In the meanwhile, we know the key level now. It's 85 280
Yep.
daily basis.
Yep.
Let's look at the weekly. It's all been clear once we cut through 89 500
All
on a
over.
weekly
Yeah.
basis.
Hmm.
So, last week we pushed up to test it a lot like,
Hmm.
NQs
Hmm.
couldn't quite make it, and now we're coming down again. Looks like we're going to end up on an inside week, but if this low gets taken out next week, then we're heading lower
Exactly.
into this,
Yeah.
73, 71 area.
Yep.
That's your weekly. Let's take a quick look at the monthly. Monthly just cannot get away from this the edge of this circle.
Hmm.
I mean, other than this month, almost every single month we've touched it that we've been out of here.
Yeah.
And here
Yeah.
the hurdle's a lot higher here. We got to get over 93 on a monthly basis.
Hmm.
You do that though, and then you're looking at new highs. In the meanwhile, we're going to be, banging probably between this 70, 73, 74,000 and 93.
Right.
And maybe we burn time that way. And this
Hmm.
is this is a kind of, again, I like to use the circles as education as well. You see this sometimes either when you break out, you either, rip and you run away, or you just hug the outside. And Bitcoin is doing the latter. It's hugging the outside here.
Right.
And we'll show you gold in a little bit where it's doing the former, where it's just breaking away. And it gets that burst of energy once leave the circle. Anything you want to add on Bitcoin?
No, we're good. You covered all the key points.
Okay, so let's discuss the commodities quickly. The grains are all continue to be correcting. And you and I were chatting this week on Messenger, Barry, about, that the peace accord in Ukraine, I think, is having some effect, or the prospect of a peace accord,
Hmm.
because they're talking about opening up the Black Sea and allowing the grain to come through there. And I think that's what's been weighing on the grains for the last month or so, and continues to sort of keep them in a mode where we just want to watch and be ready to attack when the time is right. It's just
Hmm.
not right yet. They're not done correcting. There's no momentum. There's no sort of impetus to get them moving. So
Hmm.
in a positive direction. So we want to leave those alone. On the grains, cotton is still sideways. 2 years now. We're really, really watching that one closely because that's going to be one of those monster breakouts when it happens.
Hmm.
Cocoa has continued to correct. Coffee, which we had as a short a few weeks ago, continues to wind up in the triangle. As soon
Hmm.
as that triangle gets resolved, it'll be back on the weekly show, as a recommendation for the short. So we'll keep watching that. Uh, Barry covered, gold and silver and copper, crude oil as well. Let's look at nat gas, and then we'll end on that circle chart on gold. So
Hmm.
let's go to nat gas. So today's price action is one of the reasons why I was I was wanting to highlight this, right? We called this square out up here a pseudo three drives. We said, hey, we're going to get some sort of correction here,
Hmm.
and we want to watch this correction. And the correction started unfolding. They battled for a while at this, four level on the full square. Then we got stuck under, and then we got what looks like yesterday was a little false break. If you look at the low here and the low there, and then today we get the immediate reversal. Yesterday we closed on the highs, and today we're looking to close on the highs as well. And the key thing for me is if we can close above this four level, this
Hmm.
full square level, I think we may have a run here again.
Especially that little false break you can move
Yeah,
yesterday. Yeah.
that's the one, right?
Hmm.
It tells you that, okay, this was, they purposely came down to grab the stops here, and now they're gunning it.
Yep.
So we're going to watch and see. A close over this 401, 402 level will be very bullish, in my opinion, and be, sort of cement that false break and reversal. And we may see the challenge here. The next thing we want to do is see it get over, 460,
Hmm.
get above that half square at 460, and then we could be up and out. And you can see, Barry, this is one of the things you always talked about. We're starting to see that curl,
Hmm.
the steepness. First, it started off
Yeah.
relatively flat, then a little steeper. Now we got a little steeper trend line. So there's momentum coming in here. So we want to watch that next week. If we do close below 401, say $4 level,
Hmm.
or next week we get stuck under four, it's not happening.
Right.
We got to be above that four level to have this thing really start ripping. Let's take a look at the weekly. Here's something also on the weekly. right? We came up, said, okay, we failed there. We should come down and test 371. Look where the low is.
Perfectly.
Yep, and we're closing on the high bar of the week. I mean, the high
Mhm.
of the week for this weekly bar. It is a down bar, but next week, if we take out the high, then that means we're running. So you could also, watch the high and low of this week's bar. Whichever one goes first will let you know which way we're going to go.
Mhm.
And then here's another view of the sort of the angle of ascent getting steeper. That's relatively flat, a little steeper, much steeper.
Mhm.
So that's the weekly. And there's good tests here too. Like look where the pullback here happened, like where we tested
Yeah.
the breakout of the triangle. Here we tested this high, the high from 2023 on the pullback. So I don't know what's going to cause it. Is it weather? Is it, a supply constraint or something? But something's going on here. We're starting to see
Yeah.
some positive price action. Let's take a look at the monthly.
I mean, compared to last year when we really called the lows, remember?
Yeah,
Or was it late 23 or whatever? No,
it
that
was
was last
down in
year. Yeah,
here.
yeah,
Yeah, it
exactly.
was early last year because we
Yeah,
were
look
just
where we
like,
are now.
I mean, it's a
You know?
monster move from there.
Yeah, double.
And here we were just talking about the value. Like every time it's been
Hmm.
down here, it's been bought.
Can't go
You know,
wrong, we said.
you can really see that on the monthly. I mean, look at on the
Hmm.
monthly. This is going back to 94, 95.
Yeah.
And so the next hurdle monthly basis is 488. So
Hmm.
let's see what this next push does. Once we take that and sit on top of that, I mean, look at you're sitting on top of, 14, 15 years of price action.
Yeah.
It's pretty big.
Yep.
So let's see. Let's see how that goes. Anything else you want to add on that gas?
No, we're good.
And it's this reversal bar today is what made me say, oh, we gotta talk about that. It's got
Yep.
to be watched. So
Hmm.
watch that
Especially after
next week.
testing that on the weekly, the low on the
Yeah,
weekly.
yeah, yeah. Very important spot. All right, last one we'll end on is the gold. You guys have seen anybody that's watched the show has seen these circles. We've had them on for a while. And the key points I want to make why I keep showing this chart is, what happens when the circle breaks? Let's go back to here where the circle's set, right? And see how while it's contained in the circle, you get this move and then it breaks out of the circle and you get a move in the potentially in the opposite direction, right? Well, here in gold, we came up, we got captured by the circle with these highs, right? And I said, one of two things is going to happen. If we're going to start making lower highs and the circle's going to capture price and we're going to accelerate down, just like here we accelerated up on the edge of the circle. Here it would be an acceleration down, or it's going to break out of the circle and go. That's a textbook example of how it breaks out of the circle and goes.
To the moon.
Yeah, and well, and in this
Mm.
case, the moon is the 180, right? Which is the
Right,
full
right,
square up here. So it's pushing to get to that 3150, and monthly basis, that's still the target.
right.
And
Yep.
this is why we like to watch the circles, right? It's cool to look at them and everything, but you can also trade off of these things when you get
Mhm.
captured, either this way you're looking long, and here
Yeah.
if it got captured, you'd be looking short. But when it breaks out, you could say it's almost like when an ABCD gets exceeded, or a square, a important level on a square gets exceeded, or cycle gets broken, a 90 or something, they run. And it gives you another sort of data point to say, okay, I know the long side is the place to be here. And I mean, and look what happened in the 3 months since we broke out of that.
Hmm.
You could say we got free here at around 27, 2800, and now we're at over 3100. It's a
Yep.
nice trade.
Very nice trade.
So
And it might not
um,
be over.
no, it might not. I mean, because again, if we get above this 180 and sit on
Hmm.
top of it, that's why I made sure I put what that number is. The next stop is 3600.
Right.
It would be the half square on a monthly basis. So the other thing could happen is we could get stuck under here and correct. It
Hmm.
could be a sideways correction like this. It could be a time correction, a big time correction like this. Again, this wasn't a lot in price, but it certainly was in time.
Hmm.
This was a couple years. So we'll watch it. But
Yeah, looking
I
good.
hope, I know people are interested in the circle. So when we have a good demonstrable lesson, I try and show them so you can see how they act and the clues they can give you to potential price action going
Hmm.
forward.
Hmm.
But speaking of managing the trade and trying to stay in gold, which is what we've all been trying to do,
Hmm. Hmm.
one of the things I wanted to bring up, Barry, was in the trade management conversation that we started last week. Like, let's say today you were short today, it's going into support, it hits the support level, you cover because it's at support and it's gone like 90 degrees or whatever the other markers you have for why you
Hmm.
want to take profits,
Hmm.
and it keeps running short.
Right.
Mentally, that is, it can be so toxic, right? If you start doing, well, what if I would have just done this? If I would have just stayed in, I would have made this much. And you don't focus on what you did right. You start focusing on, oh, look at all the money I didn't make. And you treat it as a loss, like because you didn't, get the full move. How do you deal with that mental sort of fatigue that comes in when you make a great trade, you cover based on your system and in a spot that makes sense, and the market keeps going your way?
Well, there's a couple of things you can do. Um, what I do is basically to have your initial targets, like where you always, because we don't know if it's going to go, 10 points, 30 points, or if it's going to go 100 points at the beginning, right? It looks like it's going your way, but we don't know exactly where. So it's good to look at your system, the entries, and to see, what's a reasonable expectation given the volatility, given the pattern, given where you are, if it's above or below squares. You have to reasonably sort of pick a point. And so that's my first exit. And that there you can take 50% or more
Hmm.
out. And then you leave the rest are the runners. So you leave them in there. And if we get to the second target, which is also picked the same way, let's say the first one's a full square, second one would be square and a half, the next 50% of the square. And the third one would be, let's say, the second square, meaning you have to pick something where you're going to hit it often enough. So you're not just sort of blowing your, you know, position away.
Hmm.
Um, and that part is, never ending because you always have to sort of tune in. Are we going to run today? Like today was kind of easy because you can see volume was down, everything was down today. The VIX was kicking up. So looking at all the clues, you have to sort of adjust mid-flight, how many runners you want to keep and where you want to take profits. But I'll tell you, it helps to have a standard mechanical exit and based on your risk that you take, because that way, whatever your risk you're taking, if the risk is sort of scaled, meaning, as you increase your position size or you maintain your position size, the risk remains, the known, and you can take your first 50% to offset that risk in some way.
Hmm.
I mean, this is you don't have to do this every day. After a while, you already know sort of what has to happen. So the key thing I think is to take a certain amount off the table when you have it, especially if it's close to one of your targets. Like today, that happened a couple of times because we kept sliding. I don't have the chart here, but I'll basically explain. I mean, this can work in any market.
You want me to give you the screen so you could show it?
Yeah, sure, I can do that.
All right.
So I'll use the 30-minute chart for
Hmm.
um for a reference. So basically, our fuse line came in pretty darn close to the high today. So
Yep.
after the open, and so let's say you took your position somewhere up in here, and so the first target would be around 56.94. That would be that's where we're looking for support. And when it gets there, you want to see, okay, is it sort of a blind exit, or do you want to get a little bit to see if it slips a little below? Never know. And so somewhere in here is when you want to take it. Now, if it's just waterfalling right through, obviously you want to wait a little bit. But anyway, on a normal day, you want to take it there, and then you leave a few runners. When it gets down into the next level or close to the next level, you want to, reassess the whole situation. What's the volume doing? What are all the gamma levels, and where are the options? Just do a quick review of the surroundings, sort of situational awareness, right? We have to always have running situational. We have the VIXs, have an idea of that, and to see, and then you look at your chart and say, well, is it a reasonable place to take some more? And if it is, you take some more around that price. And the rest are really basically you left because you don't know if it's going to be a panic at this point or if it's just going to go to the next level or anywhere in between. And that you can just leave it at a break even or a certain amount of profit, or it's up to you to kind of take it out. So that's taking out three positions, right? You have your initial one where you cover your risk as much
Hmm.
as you can and all of that. Then you have a secondary place where you might hit it, 70% of the time. Then you have the third position where, it's rare, but if it gets there, it's great. In the meantime, that entire thing is sort of an accordion. So on days where it's low volatility, you'll have to shrink it all down and take it faster. And on days where it's a little bit more slippery, then you have to give it the range, give it some range to run. So you're not getting out everything at 5 points and then you're sitting there waiting. But the conversation is really not that. That part, I'm sure you guys have heard, mechanical exits and all of this. But this morning I was talking to my older son who also trades, and he's, Ben, if you think I'm a ninja, so
Right.
so and the talk was really about, well, and he normally likes to hold them longer than I do, which I don't watch trade, so it's fine. But the conversation came up, well, what is the proper way to exit? What's the better way to exit on a day like today? It's not a normal day. It's, started a little bit slow, then it starts speeding up, then it's kind of stalled around, this 56.38 level, then you start to slip again. My talk was basically, look, you have to play the numbers. Normally on a normal day, by the time you get down to a full square, or key level like 56.38, we're pretty much done for the day, and
Hmm.
you can wrap it up. If you want to leave a few runners in there, great, leave it in there and watch it, and exit when you feel right. But I think the way to get around the whole mental beat up that people go through is to really, I think it's just an outlook. It's like the glass is half full or half empty. I
Right.
think, because if you take something out, well, it's half full no matter what.
It's a profit.
And yeah, it's a profit. Even if it's 50 cents, it's a profit. If it's a break even, great, no problem. But the problem is this beat up thing really, I think that obviously it depends on the individual, but the thing is to really find out, well, what triggers this beat up about, oh my God, I missed out, as if it's your fault. It's really not a fault. It's just a matter of tuning your approach and how you take your profit. So it's really getting back to the drawing board and say, you know what? This is normally how I get in, and these are normally my exits. And 80% of the time or 70% of the time, I capture this much. Well, the other 30%, what is it worthy for you to catch that? For me, sometimes if you do the numbers, it's better to take everything at your first target and not wait around risking everything else, because you end up giving it back too sometimes, right? Whatever runners you left, it doesn't mean that it runs every time. So, so I think you have to look at your system and also look at why you beat yourself up when obviously there's no reason to do that.
Yeah. You know what I think, Barry? I
And
think
that
that
overall outlook, I don't know how to fix that. That's a psychological component, right? So
it is, and I think it relates to abundance versus scarcity mindset.
could be,
It's
yes. Hmm.
the best traders know there's always another trade.
Hmm.
And the less confident traders are like, well, if I miss this, my year's ruined.
Right.
There's this, oh, that was it. That was the one, right? Instead
Hmm.
of there's another bus coming down the street, right? And
Yeah.
so
Yeah.
there is I think you're right. I think a lot of it is psychology, taking emotions out of it and making it mechanical as you described, doing certain
Hmm.
things at different levels. That helps a lot too. And
Hmm.
just knowing that you're not going to sell the top tick and you're not going to buy the bottom tick, right? And get yourself comfortable with that, just grabbing something in the middle.
And to understand, it's about making a profit. It's not about capturing everything. but
Right.
you can devise a way to capture as much as you possibly much as you can possibly do just by
Mhm.
looking at your system. You can say, well, I take half here, then I take the other half here. Well, two exits and you're done. Or you can
Mhm.
cut it into three, or you can do maybe 60% and then another 20 and then leave the balance to run. So that
Right.
first parts, I think everybody can do because we know what the risk and we know where we want to cover it, maybe risk plus something by the time it gets to the target. And the last part, you kind of leave it out in the open to be sort of creative about it. And also to, once in a while, you can hit it out of the park and you're in there for
Yep.
that ride.
That's right. That's right.
But you got to leave something in there to do that. So that way you don't beat yourself up. But I think it's worth reflecting on this stuff and, doing the numbers, and you got to kind of look at it like a game.
Very good. I think it's a
Mhm.
great topic, and as I said, we'll continue talking about it because whether you're a new trader or an old vet, it's something we all have to, focus on to improve constantly because you never get to perfection. It's always trying to get better at, capturing as much of that move as possible. So, well, great show, Barry. Thanks everybody for listening. Please, like, subscribe, share the link with your friends, make comments, set the alerts, and help us grow the channel this year. And we'll talk to you next week. It's not going to be a boring week.
All right. Thanks, Ben. Good job. We'll talk to you midweek, maybe midweek.
Yeah, we'll see what's up. Thanks
All
so
right.
much.
Thanks.
Bye
Bye bye.
bye.